Welcome to this week's Forex forecast for the week ending June 9th, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the dollar, the euro, the pound, the New Zealand dollar, and also gold. Now, if you have not joined my new partner, Prime XBT, be sure to do so. They're a great broker. They offer Forex, crypto, commodities, and indices up to 100x leverage, and also you can get up to $7,000 bonus on your deposit if you join today. So see the link in the description here on YouTube, or if you're on the website, click on that link that says free access. Okay, so starting with the DXY, the US dollar index, this is something that I mentioned last week a few times, this 103.50 level, which is the yearly open for the DXY. Now, we have seen daily and weekly closes above this level up here. Okay, so this level down here was always going to be support last week, and it's a level I talked about going into non-farm payroll on Friday. Sure enough, we saw the DXY bounce nicely from that level. Now, looking a little bit broader here, you can see that the market has been trading within this range now for several months. So this is what I was saying back here in April, and it's the reason I was cautiously bullish on the dollar, simply because the market was holding above that year-to-date low right around 100.8. Okay, so going forward, I do think that we are going to eventually see a retest up here at 105.60, the range highs. It's just a matter of how much consolidation do we get between these levels here. Also, if the yearly open at 103.50 does hold, if that fails in the coming days, then we are looking at a deeper correction for the dollar down here toward 103, potentially toward 102. But right now, this is really just a range-bound market between 103.50 and 104.25. All right, but I do like the fact that the DXY did close above some of these lows last week on Friday, okay? Now, the one thing I will say about this is that it was a Friday move. A lot of times, you guys know, I don't always love Friday moves because of the low volume, and volume equals conviction, okay? But you can see where these lows back here, the market did reclaim those on Friday. So we'll see if this can hold as new support next week. If so, we could see some pressure on 104.20, 104.25, and then a sustained break above that on the daily time frame, okay, is going to open up 105 and 105.60. Like I said, if this does fail and we see the DXY break below 103.50, that yearly open, then we are looking at a deeper correction for the dollar. Okay, now for the euro, which I continue to watch this channel off of some of these lows, and this is an equidistant channel. Okay, so what that means is that this level up here off of these two highs runs parallel to the support level down here off of these lows. And you can see where recently the market did dip down toward that level, but didn't quite test it. And this is why I think that we could see the EURUSD trend lower in the coming days and test this level. Okay, take out this low back here, test the level around 106, and then potentially we get some consolidation and a bounce from there. All right, so that's kind of what I'm thinking for now. Last week on Friday, what I did mention, or going into Friday with non-farm payroll, what I mentioned was this level up here at 107.60, okay? I was looking for some stops to get run above this level, okay, up in this area, but we didn't quite get it, okay? And you can see how key this level has been at 107.60 here over the past few months. So I was looking for a spike up here on that non-farm payroll volatility. We didn't quite get that high. However, what you'll notice on the 4-hour time frame, and this is something that I mentioned to members in the members only video on Friday, is that this 4-hour close right here, okay, what you'll notice is that at 107.60, you can see these lows back here on the 4-hour, the lows here, resistance, and then resistance through here going into non-farm payroll. Now we got the 4-hour close above this, and then the very next candle closed below. All right, now notice what happened on the next candle. We got the retest as new resistance. Okay, so the way this looks is we got the confirmation above, okay, close above, the close back below, which confirmed that this up here was a fake out, and then the retest right here. Okay, so that was a potential selling opportunity on Friday for a nice little move into the weekend. So going forward, guys, what this is going to come down to is, do we see the euro hold below this area around 107.60? If so, I think we're heading down there toward 106. If, of course, we see the euro rally next week and take out this level, okay, sustained break above this, then we are looking at that 108.30 area. Next up, we have the British pound, which I mentioned last week on Friday. And it was a very speculative post, also something with a very aggressive measured objective, but I do think that could play out if we see this confirmed, okay, this head and shoulders, this potential head and shoulders confirmed over the coming days. And what that means is that first and foremost, you can see that this is the potential head and shoulders up here. Now, we don't have confirmation yet because the neckline is all the way down here at 123. So even though Friday sold off pretty aggressively, keep in mind too, low volume, Friday move. So It is a bit speculative, and we will need to see some follow through this week. Okay, but if we do get the break below 123 over the coming days, if the dollar continues to strengthen, then we could be looking at much lower here for the pound, down here toward 122. Okay, this pivot through here, and potentially even that objective around 119. Now, you'll remember 119 if you've been following me for a while. This was the range that we traded back here. Okay, so you can see that all these lows at 119, this is the objective of this potential head and shoulders. And the way you find that is you measure from the head down toward the neckline, and then from a potential breakout point over here, you get the area right around 119. But again, very speculative as of now. This is not to say that that's where the pound is going to go. Nobody knows where these markets are going to go, but that is something I'm watching for now, especially while the pair is below this area around 125.30. Okay, you can see resistance back here. This up here is a fake out / deviation. Okay, you can see deviation here, right? Confirmed on this close, resistance and resistance once again. All right, now alternatively, if we see the pound rally higher, take this out around 125.30 and get that move back here toward the highs, then this idea that this is a bearish reversal is off the table. Okay, but for now, I am looking for, potentially a move down here toward 123, although we probably get some kind of a rally early next week before we get some kind of failure from that Friday candle. So next up, we have the New Zealand dollar, which I wrote about last week. And if you saw that blog post, guys, the market so far has played out pretty perfectly with that bounce from the 0.6 level down here. This is support. All right, you can see back here, we've got several touches off of this where it served as a pivot. So we've got, highs and lows through this area. And sure enough, last week bounced right from that 0.6 level. Now, the resistance level that I talked about last week was this area up here around 61.20. Now, that's the bottom of this trend line from back here in November. Okay, so we saw this breakdown. Also the low, the swing low from back here. And Friday came very close to that, about 10 pips away from that level before reversing. Okay, so you can see that there is a lot of indecision now following this breakdown, simply because we do have a bullish engulfing here on Thursday and then a bearish pin bar on Friday. Now, the one thing with a long upper wick like this, especially on a Friday, is my guess is we probably see the New Zealand dollar come up here and test the area right around 60.90, maybe 61, okay, before we get some type of reversal lower. And the reason for that is very close to the 50% of the wick from Friday, this long upper wick on Friday, which tend to get filled. These tend to get filled. And you can also see where this level has been a pivot here over the last week or so. So maybe something like this early next week where we get the move up, right? Fill in some of this wick from Friday, and then potentially reversal lower down here toward the lows. So really, this is just a new range for the New Zealand dollar. Of course, if we get the sustained break below this area around 0.6, then we are looking at lower levels that I discussed last week. Okay, so if we look here, those include the area right around like 58.70, potentially like 57.60, if this really starts to drop down. But for now, like I said, this is basically just a new range for the New Zealand dollar. So that's how I'm going to trade it for now. Okay, I'm not going to look for a home run trade until we get that break below this area right around 0.6. Really, this is the range you're looking at now for the New Zealand dollar, given this breakdown that we saw back here in May. And last up, we have gold, which is XAUUSD. Now, I mentioned this trend line off of the November low in last weekend's forecast video. Okay, so this isn't the strongest trend line that I've seen, but you can see where the market so far is holding above it and even got a bounce here. Now, the levels that I've mentioned recently are holding up pretty well. You can see this level right around 1957, also 1982. These are both levels that I mentioned last weekend. You can see support back here, drop below it, resistance for a bit, close back above, and then support once again. And resistance up here at 1982. Now, this is not really the kind of market you want to trade, though, when the market's just doing this, just moving sideways and really chopping around. But I do think that if we were to get a break below this trend line off of that November low, okay, right around like 1940, I think if we get a sustained break below this, right, probably a bounce from 1920 or so, sustained break below this, something like this, right, I think that could offer a selling opportunity where we get the move down here toward 1920, retest up here around 1960, potential selling opportunity from there for a move down here toward some of these lower levels. All right, and the reason I'm saying this is because we did see quite the aggressive sell-off on Friday. Now, once again, Friday moves, you've got to take them with a grain of salt, but this is something that's pretty aggressive here on Friday with this bearish engulfing candle. And you can see that it also broke back below that 1957 level. All right, so we'll see where this goes this week. I do think that we will probably see some type of bounce early next week, maybe back toward this area, and then maybe a failure from there at this trend line. And that's what to watch. But just keep in mind too that we do have 1920 just below that, 1886 below 1920. Okay, so maybe something like this over the coming days. We'll see how this plays out. Of course, if we see gold rally from this level, take out 1982, right, then we are looking at some higher levels, including this little pivot back here. Okay, you can see that this level right around like 2000, just above, has been a pivot for gold. So if we were to see gold take out this area up around 1982, then we are looking at that area just above 2000. All right, that's it for today's forecast. I hope it helped. If it did, be sure to like the video and also subscribe to the channel. And don't forget to sign up to my partner Prime XBT, where you can get up to 100x leverage on your trades and up to a $7,000 bonus on your deposit. See the link in the description, or if you're on the website, click on that free access link. Have a wonderful rest of the weekend. Trade well out there next week. Talk again soon.